Good morning, everybody. And today we're diving into what it really takes to unlock startup success in Southeast Asia, from raising funds to navigating solutions and regulations and innovations through partnerships. I'm Juliet. I teach entrepreneurship at NUS, SUSS, and the National Library Board's launch program. And I'm also part of the National Grid program for deep tech and medtech startups. I'm also the founder of a company, a social enterprise called Maid without Borders, and the moderator for today's panel. And without further ado, let's invite our distinguished panelists to the stage. I love the diverse voice that this panel will bring today with us. So we have Grace representing B2B, specific to sustainability. We have Ivan also representing B2B, specific to AI. And then we have Anuj representing the B2C platform. And also Kohki represents the investment arm. Any perspective also on B2B on long-term industries. I'm excited today to introduce to you our great diverse panel. And I'll start by first having our panelists briefly introduce themselves and what they do.
Okay. Hi, good morning, everyone. So I'm Grace, the co-founder and CEO of Unravel Carbon. We are an enterprise software plus AI agents platform that helps enterprises and cities to measure, track, reduce, and report on their carbon emissions and all their environmental impact. Fun fact, we do measure. So Expo, the entire Expo is our customer, so we do know the emissions of the convention space.
Yeah. Morning, very nice to meet you. My name is Kohki Sakata from IGPI. We are a hybrid of management consulting and private equity. So we support industries in terms of innovation and also corporates to transform. So we run multiple VCs, private equities across the globe, and we also provide advisory services to different types of corporates. Very nice to meet you.
Hi, my name is Ivan. I'm the co-founder and CEO of Pantheon Lab. So we do provide digital human solutions across the region in Asia that helps with customer service at a low level and all the way into internal trainings and marketing and ambassador solutions. We provide the digital workforce for enterprises.
Hi, my name is Anuj Srivastava. I'm the founder chairman of a company called Livspace. We are the largest and the fastest growing renovation platform across multiple countries and cities in emerging countries and emerging markets in Asia. We're very large in India, adequately large in a flourishing business here in Southeast Asia through Singapore, and have representation in the Middle East as well. We serve the residential sort of market. So think of us as a single-stop shop experience when consumers buy their homes and they're looking for a general contracting or a renovation experience. Unlike a general contractor, which actually all of us know is a very pleasant experience, we provide the most trusted underwritten experience in terms of pricing, quality, timeline, and after-sales service, and serve tens of thousands of homeowners across probably close to about 100 cities in the emerging nation markets.
So thank you, and with that, let's get started on fundraising and scaling. So ladies first, Grace. In 2022, you raised Asia's largest seed round from a climate tech platform, and you said that you were 5 times oversubscribed. Could you please share with us your core strategy for becoming a company that everybody wants to invest in?
I don't know if that moment will ever happen again. I hope so, but when it did happen, I told my co-founder, enjoy it while it lasts. But again, I think the role of timing and luck plays such a big role in a founder's journey, more than we know. So at that time, we just came out of Y Combinator. It was the peak of all climate regulations around the world, about to open up like hundreds of billions of total addressable market. And so we were just at the right time at the right place. Of course, I have an amazing team and amazing product, but there are definitely some signs, some scientific ways to fundraise well, and some of it would include, having a very short, condensed time to fundraise, right? Like have 100 chats within 3 weeks, and so you're able to line up the offers to make the best decision. The best offer, because if you start too late or too early, you will not be able to compare, right? And so then with that intense timeline as well, you create a lot of competition amongst VCs, and VCs among us know we all talk amongst ourselves. Everybody knows what's the hot deal in town, and so all of that together, we were very lucky to be in the position that we were in. And this was just before the Russia-Ukraine war, so I knew I had to lace up my war chest. We ended up raising double the amount that we wanted.
Thank you for that. And now to take funding to the next level, Anuj, can you please explain to us how you got to almost 400 million in funding, and what funding challenges you faced along the way while you were scaling?
Hopefully funding requirements are a function of the business that you're creating. Investors really look at the promise of value creation over a period of time. So the responsibility is actually not just in raising large amounts of capital. I think as founders of all of these innovative, interesting businesses, I think a bigger challenge and a bigger promise and a responsibility, really, as you guys would know, is to generate adequate amount of shareholder capital, shareholder value. And my employees are my shareholders are of course my shareholders. I am my own shareholder. So, I think a lot of what I'm sort of saying right now is, of course, a lot of gratitude for the journey over the last sort of 8 to 9 years, wherein I think we've done a good job in terms of capitalization and making sure that our balance sheet is strong and our allocation of capital is to the right efforts, and they hopefully, and I'm pretty sure they will, generate the right kind of sort of value for the company. The promise is not just in raising, the promise is in creating like a highly governed structure, focus on a lot of fiduciary responsibilities, but making sure that we are now setting the company up, for returning the money. So my responsibility now is to actually return the money, to my shareholders. But I think in the journey, if I could take another 10 seconds, we as Livspace and I personally, my co-founder and my team, we've been very lucky to actually experience and work with some of, frankly, the best brands in the financial platforms market. I mean, names like KKR and TPG Growth and Goldman Sachs, Jungle, Bessemer, IKEA. You name it, we have it sort of on the cap table. Many prominent families are represented on the cap table. So we've been very lucky to essentially experience how various asset classes think about participating and partnering with companies like us. What's the horizon? What's the kind of return profile they have? So fairly lucky in terms of what we've seen in the last 8-9 years.
And while on the topic of getting funding, let's talk about the phrase that Kohki speaks about, which is there's a lack of patient money. Kohki, can you please first elaborate on why you think money is getting impatient, or money is impatient, and why it's harder now for some industries like medtech and semicon to basically raise funding?
So I think the time horizon differs from different types of businesses. And when we first started this business, there were only like private equities or venture capitals, which we thought impatient in order to nurture industries or wait 10 years, 20 years for certain technologies to mature. So I think different types of structures is needed. So a couple of examples in our group. One is called ATAC, Advanced Technology Acceleration Corporation. This is like a building an ecosystem to support researchers build their own company. We don't have a particular time horizon, so we don't have to rush them. So it's patient money. Other one is called JPIX, Japan Platform for Industrial Transformation. This is a corporate structure, so we don't have to exit. So we can invest into different types of asset classes, and depending on the type of business, we can set the right time horizon. So I think this kind of different structure is needed in order to support the industry.
But when you say long horizon, how long is long?
For our semiconductor business, company called FMSC, not TSMC. This one, it's about, we are looking for like 10 years horizon. But if you talk about the regional transformation, we look at 20 years, 30 years. Yeah, so that's why we don't think about exit. Yeah, we just collect the dividend and try to grow the group.
So if anyone has businesses here that takes 20 to 30 years to harvest, go to Kohki here. But Anuj, when we spoke, you disagreed that VC money is not patient enough. Is this because the B2C platform doesn't have this problem?
Like money has never been patient. Money should be patient. So I think that's where I'm coming from. And I think our discussion when we were having the other day, my take is that a different fund structure will actually cater to different value creation horizon, as I think that's the point Kohki you were making. So when you're doing consumer internet startups, I mean, frankly, the model of the entire venture capital private equity industry was created out of, I don't know, Silicon Valley and New York, and you could argue that itself is up for some degree of transformation as is happening to allow for higher hold periods and so forth and so on. The classic venture model works on 8 + 1 + 1, right, if I'm not wrong. So that assumes that you will be able to build a company, generate value, return the capital, and so forth and so on. I think in ideas like clean tech, deep tech, many new emerging transformation technologies, and I think I was having a chat with the founder of a fusion technology yesterday at the same conference in Sentosa, and the models are already 10 + 1 + 1. So you're kind of already in your mind thinking that there's a 12-year horizon. But the formats of capital that I feel will become more relevant for these kind of ideas are perhaps like more sovereign capital or strategic capital, or the nature of which Kohki's experience in Japan, or family offices, other innovative formats like debt and so forth and so on. But I think there has to be some degree of transformation in addition to the classic venture capital model to be able to allow value creation to happen without unnecessary stress and impatience getting created in the market. That's what I feel.
That's great perspective on fundraising through venture creation. Now let's move on to navigating regulatory and market expansion challenges. So Ivan, when you first launched an AI company in 2019, you said you were too early for your time. Could you walk us through some of those market expansion challenges in those early stages?
Yeah, so I guess when we first started 2019, the summer, I think that's flashback 6 years ago when we start talking about like generative AI. Well, I think the word wasn't even there, and so we were like, are we synthetic media, AI, deep learning company, or whatnot? So that was very early. Like there was literally no market. I think it's very different from Gray's, like right timing, but we couldn't time it. So, but we just had that vision that someday like this type of generative AI will take off. So how we did it is we bootstrapped, with a few angels who actually saw the idea, and you start the R&D, wait for the market, but at the same time we keep looking at the signals, like is it like going well? Like it's like OpenAI doing anything like back in 2020, and if everything like is aligned, then we will just keep bootstrapping, making sure that like the next stage we are adequately funded for what we need to achieve. So we just keep doing that for the last, in the early stage, like for the first 3 years. It was like that, but that is still 2022. So like when ChatGPT wasn't even born. So I think the pre GPT and post GPT makes a huge difference for us. So after that, like when GPT came out, ChatGPT like really created that market. then we were like, oh well, we're all ready. Like we had the ready solutions. We thought through all the solutions that could be possibly integrating into the new Gen AI. So and then that market expansion was different too. So like that, we talking about how do we expand into new regions and stuff.
So that conveniently brings me back to Kohki as mentor and investor. Can you tell us what are typical challenges faced by startups when they sort of expand globally?
Yeah, in terms of the predictability or uncertainty you face in multiple countries, different countries have different regulations, FDI restrictions, local customs. So I think those are typical challenges we face. But I think the point is the companies that are not very successful in the global expansion, they don't have their focus, whether they really want to focus on each of the domestic market or do they want to go global, because the format is totally different. If you are trying to dominate one country by country, you have to take a dominant strategy. You have to adapt. You have to find local partners. You have to find the local talent in order to take the dominant strategy. Whereas if you really want to scale globally, it's a different format. So and those that are not successful, I think, are stuck in the middle, taking both. But if you want to scale globally, format is different. So I think that kind of strategy is extremely important.
So perhaps, Anuj, you could walk us through some of the key challenges that was addressed by Kohki on the topic of expanding to new markets. And I know that when we previously spoke, you addressed this three concepts of number one, investing in first principles problem solving. Number two, a lot of forward planning. And number three, investing in adequate capabilities. Would you elaborate a little bit more about these concepts?
Yeah, sure. I mean, we've had good experiences and experiences that have taught us a lot. My sort of take on this thing is for people who are building companies which essentially cut across various regions. The first market that you actually launch beyond your core initial market is like relaunching the company altogether. You might have seen it. So it sort of teaches you a lot. But I think 2 or 3 key principles to elaborate from our discussion, I think a few days ago. It sort of helps that you have a principal problem solver, somebody who's worked really close to your platform ethos and somebody who understands the core duct of the company. But it's helpful to then have a 1+1, kind of model, somebody who really understands the regional market. So we followed that 1+1 approach many number of times, given that we work across multiple markets. And I think that really helps because new markets have new culture, new ways of doing business. So that's sort of helpful. I think the other aspect that I wanted to sort of add to from our discussion the other day was it's really helpful to sort of have either an investor or a commercial partner who actually really understands the operable geographies, jurisdiction and regulations and other pitfalls that no amount of problem solving in first principle, sort of thinking can achieve. So investing in that format is exceedingly helpful. So find the right investors who understand those markets is important. And I think the third thing is it's important to have some degree of expertise on sort of finance, regulation, legal, etc. within your team. So having like a head of finance or a CFO and so forth and so on, who actually appreciate the fact that there is a certain framework that needs to be created such that you're not exposing your company to unnecessary risk. I would say those 3 or 4, sort of key principles.
So I completely agree with this, which leads me to the next segment, corporate partnerships and innovation, particularly in Southeast Asia. So we often hear about the importance of corporate partnerships and finding the right partners, particularly for global expansion. So Ivan, let's start with your thoughts on corporate partnership and innovation.
Yeah, I think corporates are great innovators. They have the resources, they have the planning. So like it is a great idea to really partner with them to be part of the ecosystem into the thinking planning stage. I think a good example for us is for us to first step here is to partner with like SingPost and SVS Transit in Singapore, where we are seeing like their pain points, like how do we help using the digital human, the AI, and not to replace. Again, I think there's a particular interesting problem in Singapore is the labor shortage and talent shortage here. So how do we plan it with our corporates to actually fill the gaps, like all the gaps that they are having, and at the same time we enhance our product, we provide that experience, and then we gain the exposure at the same time with the corporates. I think it's just the natural choice for us when we go to new markets. Yeah.
And Grace, over to you. You spoke about how Unravel Carbon used two very specific forms of key partnerships. Could you talk us through your model of corporate co-design partners and also the corporate venture arms?
Yeah, so I'm one of those that believe we shouldn't accept corporate money, CVC money too early on in our life, because their pace and their structures are not friendly to what an early stage company requires to just survive, right? Which is speed, agility, a lot of rapid experimentations and so on. So the fact that we are 3.5 years old now, we have decided now to take CVC money, and they're really good money because they open up new markets, they help you sell in the new markets. They put their sales team behind your product, right? We were just talking about IKEA, for example, right? And so now it's that's the right form of capital and partnership for every stage of a startup journey's life. There's no one size fit all. That's on the CVC side. I think going forward, we will be very open to that kind of funding. On the corporate partners, I mean, look, as a startup founder, we all know, like the first 18 months, our only job as a founder is to find product market fit, nothing else. Nothing else matters, right? Everything else is noise. When we expand now, the moment we were 3 years old, we expanded this year into Japan and US at the same time. Some people argue it's too late, too early, whatever, but when we enter a new market, we don't assume that we have already found PMF just because we have PMF in this region, right? So in those markets, the early parts of our pipeline, the early partners that become our design partners, we would charge them less, but in return, we would want a lot of feedback, right? With the expectation that we are looking for that PMF for that new market or that new sector within that new market. So design partners are great. You get feedback for free and you almost get also paid for it.
And Kohki, you also mentioned about how using conglomerates as partners is vital. You spoke specifically about this holy trinity of research, conglomerates, and startups. So could you talk to us about this?
Yes. So I think we started understanding after starting this business, but this typical VC play was a little bit difficult in Asia, specifically in Southeast Asia and Japan, because many things are not top-down, it's more bottom-up, more of like integration. So for startups, it's always good to work with large corporates to use their platform. But in many cases, the conglomerates try to do many things in-house. So you have to find a good form of collaboration. And what we recently built is what I mentioned earlier called ATAC, Advanced Technology Acceleration Corporation, which is to connect the academia, the universities, the researchers, and the startups and the large corporations so that we can build an ecosystem to develop something together and use a large corporations platform in order to scale. But yeah, it takes time because it's all about integration.
And Anuj, back to you. As much as startups really want to partner conglomerates, can you walk us through, based on your experience, what do corporates typically want from a startup partnership? And how should founders prepare for it?
I can sort of give you a little framework. So we are a managed marketplace, so there's obviously demand creation for us is exceedingly important, and fulfillment of that specific order or the customer demand in a very predictable, trusted manner is sort of the other promise that you have to your customers. So you sort of use the same framework in a sense. Predictable, underwritten demand creation. We've got all kind of affiliate partnerships. We partner very closely with real estate developers who are essentially a principal indicator of new home demand and so forth and so on. So that's important. We've had a lot of success with online brokerage houses. So, many platforms essentially combine demand, for new homes on their websites and so forth and so on, and represent lots of brokers. We've sort of had, frankly, a good percentage of our early stage demand originates from some of those channels. So these are very important structured partnerships for us. Any of these partnerships, obviously, for lack of a better description, you're kind of making a promise to each other. So they would require some kind of a baseline term sheet, right? And I'm not using term sheet as an onerous term. It's just an agreement that you will essentially have the following handshake and the following protocol, the following sort of SOW, so to say, when you're actually managing these large sort of relationships. On our supply side, we work with tens of thousands of small, subcontractors, workshops, and so forth and so on. But some of the largest brands in the market as well. For example, Saint-Gobain, which is also like a minority investor in Livspace, is one of the largest French agglomerate in the construction material space. We have a very deep partnership with them in India in the area of, I think, false ceilings and glass partitions and so forth and so on. Any of these relationships is like a two-way handshake, where you're really establishing the terms and conditions of how you'll operate together. But my advice to everybody is deeply think about the promise that you're making to each other and reflect that in the terms and conditions or term sheets, for lack of a better description.
Yeah, so I'm really enjoying this panel, but unfortunately time is almost up. So before I let you go, I want to conclude with just one rapid fire question. So very quickly, panelists, please tell me, what is one thing you want our audience to take away from this panel today? Starting with you, Grace.
One thing. Find a market that is big enough and a problem that you have a special insight into, and that makes you the best person to solve for. That's like 3 in 1, because I was like cheating on your question.
Yeah, thank you, everyone. We think that globalization is shifting towards regionalization, and we need to solve the real problems by using digital technology. So I think there's a lot of opportunities for everyone in multiple countries. And if you need any support, please reach out to us.
I guess for me is, if you want to start your startup, do be stubborn, persistent about it, and stick to what you believed in. But of course, also learning the feedback, like Grace was saying, feedback is important. Like watching the signals is still a goal and all, right? And I think in my case, we really cannot time the market, but stick to what you believe in. Yeah.
Yeah, looks like I've got the 1 minute 45 seconds now. But jokes apart, and we were discussing this, look, startup building is a very hard, not lonely, alone journey. Right? So I think it's important to actually get into it with eyes wide open. And I feel that I've seen the following characteristics help, right? So it's a high degree of first principle problem solving really, really helps. You can call it IQ, you can call it whatever, but the ability to actually look at unstructured problems and break it down and use simple logic to sort of solve it, because everything is fuzzy. High degree of EQ, so emotional quotient, and just the ability to actually understand the emotional status of your team, your shareholders, so forth and so on. The 2 other interesting things which I've actually really started to enjoy and recognize is that significant amount of startup success, and it's correlated to the ability of founding teams to actually appreciate and understand ambiguity. You kind of call it ambiguity quotient. So you have no idea, it's an unknown. So your ability to actually manage the ambiguity and then derive beauty out of that is extremely vital. And if you'll allow me one more, I think the learning velocity, which is the ability for someone to actually learn really quickly on the job, maybe those 4 characteristics.
So thank you, panelists, and thank you very much to the audience today. I do hope you've walked away with key insights to help you understand your corporate partnerships and fundraising strategies for Southeast Asia. I'm Juliet from Maid Without Borders, and it's been an absolute honor moderating today's panel. So good luck, and may you all be blessed with great successful ventures to come. Thank you.
Thank you.
Yeah.